In today's video, we're diving into the brand new Trump accounts. These are part of the big, beautiful bill that was just passed by the House. Originally, these were referred to as MAGA accounts, which was actually an acronym for Money Accounts for Growth and Advancement. But in the 11th hour, they changed their mind and decided to change the name to Trump accounts. Today's video will dive into what these Trump accounts are, how they are super useful, and what the subtle differences between something like this Trump account and a 529 or a Roth IRA are. So, first off, what are they? Well, they're savings accounts that can be invested for your children born between the dates January 1st, 2025, all the way through December 31st, 2029. So, this 4 year period essentially trumps term. If you have a child that's born in this period, they would qualify for the Trump account. And in addition to that, they would have $1,000 deposited into their account for free by the government. So this is great. This is free money for your child. The idea is that this money would be invested into US index funds. Okay. That's going to be essentially US stocks, US companies in that index fund format. And then you, as the parent, each year can contribute up to $5,000 into your child's Trump account. And that $5,000 per year would continue to grow over the course of the first 18 to 25 years of their life. And once the child reaches the age of 18, they can distribute up to half of their Trump account. By the time they're 25, they can distribute the full balance. Now, the Trump account has three qualified uses. Use one would be for education expenses. So, for example, college. The second use would be purchasing a home, right? So maybe not all children are going to go to college. So maybe they want to use their account to help be the down payment on their first home. So that's a qualified use. And then the third qualified use is actually starting a business, which is really cool. This is kind of a new qualified use we don't see as often on the other plans. So one of the things I wanted to compare and contrast, for example, is the 529. So the 529 plan is strictly for college. The good thing about it is as you contribute, those funds are invested and obviously they grow tax deferred. When the child then uses the funds for qualified expenses, they come out tax free. So the 529 plans are great for college. However, that's strictly what they're used for would be educational expenses, whereas the Trump accounts have these three qualified uses. So if you have a child that's not interested in college and maybe they want to start their own business, or they already have a job and they just want to, work on buying their first home, the Trump accounts can be great for that. Now, the Trump accounts, when funds are distributed, the original basis or original contributions, those funds do come out tax free. However, the growth would actually be taxed at the long term capital gains tax rate. So that is a difference between the 529 plan, whereas when the 529 funds are used on qualified expenses, they come out totally tax free. Whereas the Trump accounts, that growth portion is going to be taxed at long term capital gains rates. So if you have a child, you want to save for college specifically, well, then the 529 plan makes more sense than the Trump account. Now, the Trump account's great because you're getting that $1,000 for free. It can be used for more, there's more flexibility, but the long term capital gain rate applies on the growth. Now, what are long term capital gain rates? Well, they are better than your ordinary income rates. They're going to be a lower tax rate. So they're going to be 0, 15, or 20% typically. But, 18 years from now, those rates will likely be different. So, that is an interesting caveat there. Now, if the funds are taken out early, the growth is subject to ordinary income tax rates plus the 10% penalty, right? So again, it's very important to wait, let that money grow tax deferred, and then use it on a qualified expense so that your child's getting that lesser tax rate and not having to pay an additional penalty. So again, the contributions when pulled out, not subject to tax. but the growth is on these Trump accounts. So that's one of the big difference between the 529. And then if we're looking at a Roth IRA, for example, similar concept, although a Roth IRA is typically going to be retirement savings. So you can contribute, say, 7,000 a year. You can get your child started on that early, but those Roth IRA funds are to be used for retirement. So it's another tax deferral. Whenever you take out the basis of a Roth IRA, it's similar where you're not paying tax, but that growth, if you took it out early for a non-qualified reason, then you'd be subject to ordinary income tax plus a penalty potentially. So the 529 plan, the Roth IRA, great in each of their respective purposes, but these Trump accounts do have more flexibility for qualified uses, and you're getting that $1,000 for free to give your child a jump start. So pretty cool. I would highly recommend getting this set up for your child and using it and contributing it to it if you have a child that's born in this time period. If you found today's video helpful, please give us a thumbs up, leave a comment below, and consider subscribing to our channel. Thanks again, and we'll see you soon.